Mark Frost. I'm a partner in the innovation team at Parry. I'm going to give you an update on everything R&D tax related and innovation related, and a lot of it from the autumn statement last week, but also folding in a lot of the changes that have been going on over the last year or so. So I'm sure everyone's aware, the government have been on a bit of a mission for the last 12 to 18 months now to modernise the R&D tax regimes, probably a polite way of putting it. There was two drivers when you go back 18 months or so, and this goes back to when Rishi was still Chancellor, which wasn't all that long ago, with the rate that we keep changing Prime Ministers and Chancellors. But there was two key drivers. There was one, there was a load of fraud found in the R&D tax regime, a lot of claims going in that shouldn't be going in, and there was a few drivers for that, and HMRC got a bit of a kicking and wanted to clamp down and stamp that out, which is absolutely the right thing to do. The other driver that tends to get forgotten only 18 months later was that the government weren't happy with how the R&D regimes were working. They weren't happy, or they weren't convinced it was doing its job to help innovation policy to get good levels of investment, private investment in the UK. And there was some research that came out back then showing the UK had about 1.7% of private investment in innovation, was about 1.7% of GDP, and they wanted it more at like 2.4%, which would put it much more comparable with a lot of OECD countries. There was then an announcement a few months after that by the Office of National Statistics that's basically put their hand up and said there was some errors or oversights in their analysis, and actually the level was probably much higher than they originally published. So everyone seems to forget that. So the main driver really for all these changes that have been coming is stamping out this level of fraud. So are all the changes that they've done the right thing to get innovation incentivized as they want it and get it flowing into the economy? I think the short answer is, if you're a large company, if you've been an RDEC claimant under R&D tax, it's only got better for you over the last 12 months. If you've been claiming under the SME regime recently, it's only gone one way and got worse. So I'll touch on what they announced last Wednesday, what they're calling the merged R&D tax regime. So this is yet another change coming in from next year, basically, where they're going to merge the SME and the large company regime. I'll touch on what they're calling the SME intensity scheme as well. So that came in back in April of this year, but it's been given a kind of stronger footing after Wednesday. And then I'm going to touch on one of the other main changes that came earlier in the year as well, because I think that's worth touching on. So what came out of last Wednesday's autumn statement? So the regimes are merging. So they're using this language of we're merging the R&D tax regimes, SME regime and RDEC regime. When you step back and have a look at it, what they're basically doing is scrapping the SME regime. The SME regime's going to be gone, and everyone's going to move under the RDEC regime and claim under that. To echo some of the points that Dell and Kat were talking about simplification. So this term's been thrown around with the R&D tax regimes as well, about simplifying them. Adele very wisely used quotation marks around the word simplification, because they're moving us from two R&D regimes to basically two R&D regimes, so it's not quite simplified. I'm being a little facetious. It's one and a bit R&D regimes going forward when you bring in this SME intensive scheme, so I'll explain a bit more about that in a second. It's worth pointing out as well, the other big incentive relief the government offered, the patent box tax relief. So this is where you've done your R&D, you maybe got it patented, and then you're commercializing that and selling that patented technology as part of a product, for example, and looking at being able to tax out 10% of the revenue streams from that patented technology at 10% instead of 25%. No changes on that, no mentions of that. Patent box has been around 10 years now. There's been obviously some changes in recent years, but no further changes coming on that regime. All the attention's on the R&D tax regime. So stepping on to what they're calling the merged regime. So I'll put my money on it that in 12 months or so, the terminology merged regime will disappear, and they'll just talk about the RDEC regime and hope everyone's forgotten that there used to be an SME regime that's basically gone now. So what were some of the key points? First of all, when's it coming in? So back in the summer, there was a draft legislation came out for this that said it was going to take effect for expenditure incurred from the 1st of April next year. That got changed on Wednesday to accounting periods starting after 1st of April next year. So basically everyone's got a little bit more time, or SMEs, because they're the main ones impacted really by this primarily. they've got a bit more time to plan and account for this. The rates, it's basically going to adopt the RDEC rates. So it's the RDEC regime, right, pretty much. So you've got the 20% headline rate. So figure out your qualifying expenditure, you get 20% of that. The RDEC, as it's been for 10 years now, it's an above the line tax credit, so it goes in like income in your accounts. But it's taxable. So the simple number at the moment is you end up with about 15% net benefit. By the time you've worked it through your tax comp and how the steps you've got to go through in there with the credit, you end up with a 15% net benefit. The one change that came in, or will be coming in for these accounting periods starting after the 1st of April next year, is if you're in a loss-making position, instead of having to take tax off the credit at 25%, they're going to let you use this notional 19%. So you end up with a net benefit of 16. There's always endless percentages, right, in R&D tax, right, as there is in a lot of tax. So I've tried to keep it simple. So you're at 15% at 16.2% basically. So again, if you're currently an RDEC claimant, you're kind of as you were, and even a little better off if you're in a loss-making position. If you're currently an SME, I mean, the rates came down from the 1st of April this year anyway. By the time everyone moves under this, you're down again compared to what you've been used to claiming. It sucks to be an SME when it comes to R&D tax. The other big change, so this was announced earlier in the year, but this is still coming in, the overseas restrictions. So again, this kicks in at the same period starting after the 1st of April next year. So if you're using basically overseas-based people, whether that's staff of other group entities or external, you're not going to be able to claim for those going forward or once this merge regime kicks in. So that'll apply to everyone, obviously. The cost categories, again, this wasn't new on Wednesday, but it's worth bringing this in. One of the changes that was announced back in the spring around broadening the cost categories that companies can claim. And it's going to be particularly applicable for IT and software claimants. So where you're using IT cloud infrastructure that's integral to your R&D and your product development, software development, you can look at claiming those costs along with data licensing costs as well. So this should have come in 10 years ago, right? Because for 10 years, no one's been buying servers and sticking them in a cupboard and installing their applications on it, right? Everyone's been in the cloud for 10 years at least, right? So this should have come in then. This is a government playing catch up to keep it kind of modern with how people do R&D, particularly software companies. Maths has come in there as well. It's a bit of a weird one. I think a lot of us scratch our heads as to where people are doing a lot of R&D with maths. So you get a lot of academic level research and development with maths at universities. In industry and business, I don't think it's going to be a huge one. It's probably, again, somewhere linked to the software claimants and some of the AI stuff probably, and maybe even some of the financial services around some of the complex financial modeling that can go on in the software. But maths is in as well. It was always a weird one because it was always in there in the guidance as mathematics is not part of the definition of science and technology for R&D tax purposes, but they've decided to bring it in. Subsidised expenditure. So again, if you're currently an RDEC claimant, there isn't really any change here. If you're an SME claimant, there's rules at the moment around if your R&D's been subsidised, so particularly by grants. If you had a grant, would have stopped you probably claiming under the SME regime, but you've probably been able to claim under the large company, the RDEC regime. Well, there won't be any of these rules coming into this merged regime. So what that could mean in theory, you could go and get your Innovate UK grant to help fund your R&D, and then look at taking advantage of the R&D tax regime on it as well, and get double whammy. Subcontracting. So I think it's going to be a hot topic. So they're basically taking the subcontracting rules from the SME regime and putting this into the merged regime. So RDEC claimants at the moment, you can't claim for R&D you've subcontracted out to somebody else. SMEs currently can. Going forward, everyone under this merged regime will be able to claim that subcontracted R&D. So again, it's another benefit for the RDEC claimants. There's a load of, for some of you, there might be costs you haven't been able to look at claiming for in the past. You're now going to be able to look at claiming at those. The flip side of that coin is if you're an SME at the moment, claiming where a large company subcontracted R&D to you, because they can't claim it, but you can, and you claim it under the large company regime, no, that's going to fall away. because it'll be the large company who's subcontracting it out that can claim it. It's the government. The note said they wanted to put the ability to claim in the hands of the people, I guess basically paying for the R&D and therefore carrying the risk of doing the R&D. That was their logic. But yeah, it's going to be downsized for SMEs. It's going to get interesting though here with certain industries where there is a lot of either bigger companies paying smaller companies to do things for them, product development, or even explicitly subcontracting things to them. There's going to be a bit of a shift there with who's claiming what compared to what we've currently got. There's this bit in the technical note from Wednesday that is going to be a nightmare, I suspect, where they did put in some exemptions where if you're they have this thing about subcontracting out service rather than subcontracting out R&D. I've never seen a single contract ever in 10 years of doing this where someone says, I'm going to subcontract you to do this and it's R&D for tax purposes. When no one does it, right? Your contracts go up for you, whatever commercial basis you need in the contract. So they've got this concept around services, and actually if someone's subcontracting a service, but they used software product development as an example in this, that actually be the people developing the software can claim it, not the company who's paying for it. How people are going to navigate that rule around, well, what's a service versus what's actually subcontracting R&D? That's going to get a little grey, I think, particularly now. It's no different to what the SME rule is now, but it changes the whole construct when you're allowing everyone to claim this, and therefore the large companies. So it's going to be interesting to see how that plays out and where the line gets drawn on that. And then finally, the PAYE NIC cap. This is a small point, but again, good for RDEC claimants. The way your credit can be capped if you're loss making and getting a cash payment from HMRC, they're going to allow everyone to use a more generous cap that's in the SME regime, not the large company regime. So it's probably not going to impact many people, but that's in there as well. So that's the headlines. What this merged regime, or what I guarantee they'll just start calling the RDEC regime at some point, is going to look like. So it is a lot of changes, even though it's basically scrapping the SME regime. Particularly these changes around subcontracting and some of the other changes means everyone's claim is probably going to change. The structure and blueprint of the claim is going to change. So the one caveat that they've thrown in to leave us with 1.5 or one and a bit R&D tax regimes is what it's called the SME intensive scheme. So again, this was first announced back in the spring, and then they've added a few extra rules to it and changed a couple of things. So what they realised, they've known this is a journey they've been going on for the last 18 months, right? Scrap the SME regime, move everyone under RDEC. Where they've seen a lot of the fraud and the abuses in the SME regime, particularly right at the small end of the SME regime, this is where there's been some advisors who've been helping people claim stuff they shouldn't. So it ultimately amounts to a pretty heavy-handed way to get rid of the fraud by getting rid of the regime. I mean, it's not the best solution, but it will get rid of it, and it is. But they realise there's going to be companies, particularly small SMEs, who are going to be really adversely impacted, almost to the point of, is the benefit worth making a claim anymore? And software startups and tech startups are particularly in this category, and we've got a lot of these clients, particularly down in London. So they brought in this intensity metric, or this intensity scheme. So it basically says, if 40% of your total company expenditure is on R&D, they'll basically give you better rates of relief. And so they're letting you claim, and I should point out, sorry, this is just for loss makers. So if you're in a loss-making position where you're surrendering tax losses for a credit, they're going to let you keep the rates of 186% additional deduction, and you can surrender up to 286% of losses at a rate of 14.5%. So you still, going forward, you still have the merged regime and all the rules, but just how you actually monetize and how you deal with the R&D benefit and how it comes into your tax comp will be different, or the same as it is for SMEs currently. But they've reduced the threshold, so rather than having to be at 40% of your total company expenditure R&D, they've dropped it to 30% from accounting periods after the 1st of April next year. So again, I think it captures a few thousand claimants, but not huge numbers. And they've put in a year of grace. So if you think about it, what this really means, if you meet this 40% or 30% as it'll be level for 1 year, you've basically got it for 2 years, because they're saying if you come out, if you don't satisfy that criteria in the second year because you've made a large purchase of some description, Given you're a small company, that might skew you above the metric, or below it rather. But they'll give you 2 years to claim, and give you a year of grace, and then you have to check in year 3 whether you're still meeting it. So that's there as a bit of an aside to kind of try and help some of the smaller SMEs. And then the final point I wanted to touch on, the additional information form. So this wasn't a new announcement from last Wednesday, but this was, of the many changes that have come through over the past year, this was probably the biggest one that came in August. And I've put it in because in the first 4 weeks of this being live last summer, half of all R&D claims that HMRC received didn't have a form with it. So this is mandatory now. If you put in an R&D tax claim, you've got to put in one of these forms with it. You have to put in a form for every entity, if you've got multiple entities claiming in a group, and for every single year you put in. On the surface, when you look at that form, the information thereafter isn't a huge amount of difference compared to what probably a lot of R&D advisors would have helped you put together for the past few years. But there are some differences that drive some differences for a lot of people in terms of how you build up your claim as well. So it's not just a form that's got to be filled in. You've got to think about how that impacts how you construct your claim. And one of the key things is around how your projects build up the costs in your claim. So before this was not a condition, they now want to know how much each project has contributed to the qualifying expenditure that you're claiming. So that can drive a bit of a methodology change. There's also prescriptions around how many projects they want to see written up. So this has generally gone up, probably compared to what you would have been able to submit before. So they basically want to see more of the projects described. And simply put, they want to see half the projects that you've claimed for written up and described, to cover half of the qualifying expenditure, with a minimum of 3 if you got 3 and a maximum of 10. So there's more documentation for a lot of claimants there. There's other things on this form around. You've got to name your R&D advisor. So that tells you one thing, that they know who some of the perhaps less than honest advisors are in the marketplace. And if you've got to now name who's helped you with your claim, I suspect that's being used, right, to check if you're on the naughty list or not. And there's certainly, coupled with a load of guidance that came out 3-4 weeks ago that I haven't got time to go through, there's a much greater scrutiny around how you're identifying projects and the boundaries of R&D and who's assessing those projects. There's a whole raft of guidance from a few weeks ago that we're still getting our head around, to be honest. So all of this is kind of coming in. I think this is going to settle down. They've basically had to bring in a load of changes in a 12-month period that they should have been bringing in for the last 5, 6, 7 years and haven't. So there's a load coming now in 12 months. After this merger regime comes in from next April, I think the rate of change will drop off significantly and we'll have a bit more of a steady state. But yeah, this is certainly a turbulent environment at the moment. Right, I'll stop there. So if you've got any questions afterwards, just give me a shout on anything R&D tax related.